Welcome to TheoTrade. This is Don Kaufman, March 16th, 2020. You got to look at this with 4 minutes left to go in the trading session and just ask yourself, how much worse can this market possibly get? The S&P is right now facing an 11% loss. This bell just cannot come soon enough. If you're unaware of some of the rules, there are no circuit breakers. Again, there are no circuit breakers in the last 35 minutes of a trading session. That means a 13% down move will not effectively stop markets, and we are coming close. In fact, if you take a look at the Russell, it's an absolute bottomless pit right now into the cash close. But again, this is what we need to see. If we're going to capitulate, let's just get it done right here, right now. And the volume is speaking volumes inside of the S&Ps, inside of the Russell, inside of the Nasdaq right now. This contract size out here is nothing less than monumental with 3 minutes left, again, to trade. We are going to see effectively one of the highest VIX levels ever recorded in the history of markets. In fact, it is worth kind of noting this. In fact, we're even going to open this up to a full 20-year time frame on a daily chart. Again, critical VIX levels that we're hitting right now and continue to hit, this being the one of the all-time highs. But again, in terms of a closing high, we're going to be there. Okay, we are going to be there into this cash close. Again, the VIX at the 82 handle down to the bottom of the screen right now. If you take a look at the VVIX at the 204 level, again, another record everywhere you want to look. As I was saying, though, a moment ago, okay, we got to get this done. We got to get it done. We got to see wild sell side activity. There has to be capitulation all over the place. And you got to feel like there is literally no tomorrow before this marketplace is going to be done with the sell side activity. Let's start to actually break this down. Again, this cash close cannot come fast enough. This is kind of what we call a quintessential full court press into the close. I'm not looking at ticks. I'm not looking at anything. But the fact that the S&Ps are being sold into an oblivion and everything basically is following suit. This is all about statistical arbitrage. This is a full-blown asset flush. That's why you actually have things like gold down, oil getting crushed today. Across the board, there really isn't much of a place to hide. If you do think about bonds, yeah, but bonds, they're not even rallying anymore. At this point, okay, this is margin call. This is absolutely hideous, okay? Again, facing now almost a 12% hit inside of the broader markets in this Monday's trading session. We're now into the fourth week, if you will, of just unprecedented volatility. But as I was saying a moment ago, people are going to ask constantly, how much worse is this going to get? What am I looking at over here? As I said, this kind of a close, okay, this is what you want to see. You want to see traders capitulate. You want to see things like the financials, okay? It's hideous. Let's start to look a little bit on a year-to-date percentage basis. Again, as I am recording this, you got to believe I'm watching the S&P futures here out of the corner of my eye, and there's a complete flush going on right now inside of the Russell. That's what it's just grabbing my attention here into the close. Okay, regardless of recording a video right now, it's down almost 20%, people. This is one trading session. This could be the largest statistical move ever in the history of any major financial product in terms of a major index product. Again, the moves here are just stellar at the moment. Look at this. And this is exactly what I'm talking about. I think we just saw it. I think we just actually saw and got it recorded here. The absolute bottom possibly of the Russell. That's the closing bell. Okay. Remember, some of these products are open though, of course, 15 minutes after the close. As I was saying, I think we may have just seen, okay, a little bit at the very least of a temporary bottom hit this marketplace. We are going to have, okay, the highest VIX, okay, on record. Volatility futures are flying. You also have to remember, this is a quarterly expiration week. So as I was looking a moment ago at the S&P futures, and again, one of the things I've been talking about just incessantly lately is that the S&P futures, to me, they're just not doing enough volume. Like, this doesn't look a capitulation, right? It doesn't, like, that's not what capitulation looks like. But there's a roll going on right now. And if we start to go to the S&P futures, you can see that net in this roll, okay, over 5 million contracts have traded. So when you start to think about, okay, you see what I'm saying? There's over 5 million contracts that have traded. Now we're starting to get it done. Again, I believe that very short term, we may have just seen it in terms of a degree of capitulation. Now, there's going to be some good portions of this. There's going to be some not so good portions of this. When it comes to a number of retailers, and let me just give you a few examples over here. If you hadn't looked at something like Gap earlier in the day, right, it is getting just decimated, down like 51%. Here's an underlying, as I was saying, it's decimated. Does that mean I would go out there and buy it? Absolutely, unequivocally, no. There are going to be some retailers that are going to continue to feel like a bottomless pit. But then, okay, there are some areas that are starting, okay, to become worthwhile taking a look at in terms of getting a few longs. And we're going to start to nibble. And we actually have started to nibble a little bit. When I start to look at some of the banks, okay, banking sector here, Bank of America down some 42%. I mean, again, you have to just stand back and rationalize how bad the damage has been. We're 3 weeks, okay, and now working our way into the 4th week of this, again, unprecedented volatility event. Citi today is down 20%. Now, I'm going to tell you something. I actually closed my bearish positions in Citi. I closed bearish positions in JP Morgan. I closed bearish positions in Bank of America. In fact, okay, today, fairly busy day for me. I had about 39 orders, 53 fills, some chaos in trade. There were a lot of, situations. I'm just trading one lots in here to not get my head taken off. But I also wanted to show you one really interesting thing. I was working a few hundred shares of the spiders. Okay, and I'm actually going to highlight this because I was firing off a number of positions, but I'm working a few hundred shares of spiders. It filled 7 shares, 3 shares, 8 shares, 8 shares, 8 shares, 8 shares. You've never seen anything like this before. The liquidity was gone from the markets earlier in the trading session to the point that we were just absolutely free falling at that point. Nevertheless, I was able to wiggle out of a number of positions, specifically inside of the financials. But again, coming back to, how much worse can this possibly get? Well, now we're going to start to look, okay, net for a couple of longs, which ultimately I am not here to dictate to you that this is a bottom per se. I am going to, though, state, okay, that I believe that individual sectors have finally taken a beating to the point unto which they are very high probabilities of bouncing, really one of those being the financials. Now, time out for a second. As soon as I said the financials, all right, well, that's going to be kind of positive. I mean, the financials were down some 13% today, wiping out, okay, everything. Again, everything that occurred on Friday. The S&Ps were up 10%, only to see us down 13.7% on those financials specifically today. Now, remember, okay, a ways back, I told you, those financials got under 26.50. It was all over for the marketplace. Financials today hit the 19 level. However, with the market closing on the bottom, and this is important, the financials are not on the bottom, okay? So I'm looking at the financials and starting to see a little bit of opportunity, if you will, nibble. And when I say nibble, I'm not going to stand here again and say that this is going to be a bottom to this marketplace. But I am going to tell you right now that things like Citigroup back down at $40, it was trading 80, okay, just a month ago. 80. It's literally been halved. All right. So that's where, again, I would say, all right, looking for a bottom. I'll give you another one. Something I actually got long today. Silver. SLV, okay? I didn't actually use the futures contract. I went out and bought the ETF. Why? It's $12. Now, I've been trading silver on and off since really the financial crisis times. And that's how far back we have to go to actually see silver in this range. Now, this is not an overnight trade, nor is the XLF. These are not overnight trades or something like Citi. These are trades that you're going to have to sustain for quite a period of time to make it come to fruition. Because I'm going to tell you once again, I'm not here to fish out a bottom. I'm here to tell you the implied volatility is sky high, even at things like silver, okay? I've never seen like 97% implied vol in there. Look at this. The thing is a $12 product. I was actually out there selling 11 and a half puts for 55 to 60 cents. There's only 11 days left in them. I sold some 15 puts. Again, similar, 11 and a half puts, like 65, 70 cents. It's crazy how high, again, the implied volatility has gotten inside of this marketplace. You can see I actually sold 12 puts earlier today, over $1, right, for 32 days. So what am I doing? Well, I'm trying to sell some puts in effort to actually get long a little bit of silver. And again, that's how I like to get long different products, but you're going to have to sustain some near-term pain. Now, back to the primary question here. How much worse is this going to get, or can this possibly get? I'm going to tell you the area, once again, of discontent. Now, I talked about this on the weekend video. I'm going to talk about it again. I never got the opportunity to get into the short position in Apple. I did not get the opportunity. I talked about it on the Friday video. I was looking for a little bit more of a bounce, maybe to the upside on Monday, okay? I was kind of thinking to myself, the Fed probably won't do anything this weekend. They did do something. It didn't matter. The S&P still got whacked by the tune of almost 11%. Nevertheless, the point that I'm trying to make over here, okay, still when I look at Apple, and Apple's down $35 today, Apple off by almost 13%, I'm sorry, I have a problem with this. Okay, you want to hear a problem? First of all, Apple's down almost 20% on a year-to-date basis. Neither here nor there, because when you start looking at the S&Ps, the S&Ps now are down almost 26% on a year-to-date basis. Okay, we're bear market in every neighborhood. But what I'm bothered by in Apple, okay, isn't the year-to-date chart. It really isn't. It's the fact that Apple is only back to where it was. Here, let's just draw it on the chart. Late October, you got to be kidding me. You're going to tell me that this is sell-side activity? Okay. Listen, Apple bounces. I think we still have a short opportunity in here, but it's got to bounce. Okay. To what? Oh, let's call it like the 260-ish, and I will step in and I short it. Okay. Looking at stuff like Microsoft. All right. Microsoft's been pummeled a little bit more. Well, back to the levels it was at what? Mid-October. Okay. Technology could still bleed out. And because technology could still bleed out, the S&P 500 is still at risk. What we have right now, okay, is a complete dislocation and a complete revaluation of an entire marketplace. I say this strictly because if you haven't looked at the index products, watch this. The spiders are down almost 26%. With me? The IWM, decimated, down 36%. Of course, that's your Russell. Okay, the QQQ down a loving 21.6%. You're going to tell me again that, it's going to be all right. We're going to bounce back. Again, I believe that some of the mutual fund sell-side activity is starting to grip hold, but hasn't actually taken center stage. Apple, of course, along with Microsoft and a few other of what we kind of call, some people call them the tech titans. I don't. They are the monsters of tech. And those monsters, okay, are going to be hideous when we start to see, okay, prolonged sell-side activity. There is still damage that can be done to the broader S&P 500. I think at this point in time, if you're going to go out there and you're going to nibble to the long side like I am doing, and again, for those of you that have been around for a long time, everybody always says, I'm ever the bear. Well, ever the bear is actually putting on, in most cases, some bullish trades. I am starting to nibble on the long side and put on some bullish trades, but very sector specific. The S&Ps as a whole for me, it's just not there. It's too much risk. I mean, a VIX closing at 83. I know and you know that that's an extreme. Okay. I also know that when the VIX closes at this type of a level, not only is it unprecedented, but a wicked rip your face off rally could be right around the corner. But I also know one other aspect, and that's this. Okay. The VIX at a closing high, okay, in most major market crashes did not denote the lows. look no further, okay, than in 2008. And there's a bunch of instances I can bring up, but in 2008, the VIX actually peaked out in November. The market didn't, finish the sell-off, of course, until March, okay, of 2009. Nevertheless, okay, this is, in fact, one of the most hideous down days that we've seen thus far. Again, the Russell down some 15%. The broader S&P is down approximately 11%. No matter who you are, no matter where you are, you're impacted by what you're seeing on the screen. Even if you don't think you necessarily have positions on, okay, this is going to tear an economic hole in the fabric of this entire country, the entire world. These kinds of moves, okay, are damaging, and the effects can be felt literally for years to come. The Fed sees it. Why do you think they didn't wait? Their meeting was Wednesday. They pushed it to what? To Sunday. Not to save you in the market. They did it to save the financials. Okay. Again, at this point, be sector specific. Keep your head down. Okay. Where possible, try to stay defined risk. And if you're going to sell puts, you better be willing to own those stocks. Okay. You better be willing to get that stock put to you. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.